Hi everyone, welcome back to the channel. I'm PPE and this is the Peso Pro episodes where we talk about money management tips and peso tricks. Today we're gonna cover an exciting topic on housing loans and how do you actually pay off a housing loan that you already have. If you want to learn more about these things like housing loan management, personal finance in general, or investments, please feel free to hit the subscribe button and the notification bell below. Okay, almost every Filipino family's dream is to have their own place that they can call home. And it has been ingrained in our system from our parents, even our grandparents, that real estate or having your own property is probably one measure of success that everybody sort of agrees to. So if you have a stable income, then you can set up your own house. And if you have multiple properties, that's commonly the sign of you are being successful or you are wealthy, or at the very least, you are doing well in your life and you are stable enough to earn for yourself a piece of property that you can call your own. So, in a lot of cases, people my age who are in their late 20s or early 30s are somewhere in the middle of a housing loan. And I too am in that phase and I haven't finished my own loans. And so, in this video, we're going to talk about different ways on how you can manage your own housing loan because that can be the single biggest purchase you will do in your life, and what are some of the options that you can take, and towards the end, a few caveats for you to think about before you actually make payments on your housing loan so that you are fully aware if you are making the right decision or not. Housing loans often come in the millions of pesos, and this is just because of the sheer amount of property that you're buying. Which means that any fluctuation in interest or fees as a percentage can be a very, very big deal because every time you increase a percentage point, this can easily mean several hundreds of thousands over the next 10, 15, or 20 years. A lot of us will have loans in our bank or via Pag-ibig. Pag-ibig also offers flexible terms and quite competitive rates, especially for low-cost housing. So if you are planning to get a low-cost house somewhere in the province and within the amount set by the Pag-ibig to be considered as low-cost housing, they can actually be a very good alternative for you because they will offer better rates. Let's jump right in. Let's assume that you currently have a housing loan and your question is, how do I actually pay for this in a more efficient way? One of the options that you have, and probably the most obvious, is to one, pay more, right? What you can do, in a lot of cases, banks will allow you two options on more payments against your mortgage. While banks won't like this because you're essentially paying the principal faster, they are obligated by the terms and conditions of the loan that you can actually make some prepayments. And the catch here is to make prepayments within the allowed amount that you are able to maximize that advance payment without paying for any fees. Let's assume that you still don't have the money to fully kill or extinguish the loan yet. Let's say you have 2 million pesos left in the loan and you have an extra 100,000 pesos that you've saved, or it came as a bonus from work, or you sold something and you suddenly have extra cash and you want to use this to pay for your housing loan. What you can do is talk to your bank and ask if the two options are available. One is a lump sum payment that you can do, and it will just be a direct debit against your account, or it can be a check payment that you will do against the mortgage. The good thing about paying in lump sum is you're effectively paying off a big portion of the principal amount, which then becomes the new base for the interest in the future. To explain, pag nagbayad ho kayo ng isang lump sum payment, or if you go with option number 2, which is to make higher payments every month. So for example, if yung housing loan mo is 20,000 per month, check with your bank if you can actually put in 25,000 pesos na payment every month. In those two scenarios, you are essentially paying more than what you are required to pay as part of your amortization. So let's go back to scenario 1. if you paid the 100,000 pesos in bulk, this 100,000 pesos actually gets deducted from the principal amount of the loan. Which means na yung balanse ng loan mo, magma-minus 100,000 siya agad-agad and hindi siya ma-apply to any interest. What this does is pag nag-lump sum ka, bababa yung balance in your loan from, let's say, 2 million, bababa siya ng 100,000. So, yung napapatungan ng interest is now just the 1.9 million na balanse. The effect of that can be very, very helpful because if you don't pay less in terms of your mortgage, you can actually end your mortgage earlier than what was intended. So for example, if naka 10-year term ka, but if you made a lump sum payment, probably you will end on 9 years and 6 months. You have to have a conversation with your bank to get the exact calculation. But essentially, because nagbayad ka more, you will end up paying off the loan earlier than when you're supposed to. The same is true kung nagbayad ka more every month. It's just that the effect of that may be a bit less because every month lang siya natatanggalan. But that's still a good option for you to do loan payments because at least you're taking out more from the principal versus you just paying the amortization amount. Tip number 2 is to make more frequent payments. This is not applicable to all banks, but I know of some banks who allow you to pay beyond the normal monthly payment cycle. What does this mean? Typically, when you get a housing loan, you will pay every month. So, nakaset na yan either as an auto-debit or as a PDC transaction or a post-dated check na transaction na binigay mo with the bank. What some banks would allow you to do is to pay somewhere in the middle. So, let's say you earn your income or nagsisweldo ka every 2 weeks or every 15 and 30, for example. Instead of paying the loan only on a monthly basis, what you can actually do is to add an extra payment on the 15th or any date as long as it's allowed by the bank. Because once you do more frequent payments, you're actually taking advantage of 2 things. The first thing is nagbabayad ka more, which is same as tip number 1. But second is nagbabayad ka ng mas maaga. So when you compute for the accrued interest or basically the interest on the loan, ang gagawin ng bank is i-average niya kung kailan ka nagbayad. So since nagbayad ka ng amount earlier, the chances are, yung interest computation, i-factor in niya yung date na yun. So if you have extra money, one of the good tips, assuming your bank allows this transaction, you can actually pay earlier and that will save you a bit of interest and that interest can add up over time. The third and final tip I had for you is to refinance your current housing loan if it makes sense. This is a personal thing that I did about a year ago because there are a few traps that I want you to be aware of when you're handling a housing loan, especially if you're new to this and you probably have not undergone a repricing cycle. What does this mean? Nung nag-sign up ka for your bank loan or your mortgage, you signed up for a term, an amount, and a repricing period, and an interest rate. So there are 4 factors. Let's go through them one by one. Term is simple. This is the number of years to pay. So pwedeng 5, 10, 15, 20, or ang pinakamahaba is typically 30 years. The second one is the loan amount, magkano inutang mo. The third one is the repricing period, which means gaano ba katagal naka-fix yung interest rate for you. In most cases, yung choices nito is 1 year, 2 years, 3 years, 5, and 10, or full term. What does that mean? Kung full term, meaning yung interest rate mo naka-fix for the full term. So if yung loan mo is 15 years, the interest rate becomes the same over 15 years. If 1 year lang siya pareho, then next year, sasabihan ka ng bank mo kung ano yung bagong rate for the next year. So every year, or also called as annual repricing period. And then of course, you have the fourth element when you get a loan, which is the interest rate. Now, when we talk about refinancing, think about it this way. Ang mangyayari sa loan mo is once you set in those 4 terms, you will have a computed monthly amortization amount. Kung ano man yung monthly amortization amount na yon, it will be true based on those 4 different kinds of inputs. So if for example, may annual repricing ka na pinili because typically ito yung pinakamura and mura siya because alam ng bank exactly how much kung ano na yung ipaprice niya sa next year. Typically, banks would offer a higher interest rate kung naka full term or naka 10-year lock-in because they also want to protect themselves for any fluctuation in the interest rates. So, meaning, dahil hindi nila alam kung ano mangyayari pa on the 10th year, 12th year, or 15th year, what they actually do is they give you an average estimated interest which tends to be higher because the banks are also putting in allowance for what if tumaas yung interest rates 5-7 years from now, edi malulugi sila because they already locked in a rate for you. So chances are, if you didn't know about all of these things, you probably went for the 1, 2, 3 year repricing because those typically are the cheapest interest rates. Is that a bad thing or not? It's totally up to you. What it just does is it opens you to a bit more of a fluctuation in your cash flow. Kasi pwede na nag 1 year repay ka and may promo rate na say 4%. So, sobrang mura in today's current environment. But then, next year pala, nung nag-reprice, naging biglang 7% siya. What that will do is, the loan will recompute and your monthly amortization will change. So, that can be a thing that can swing both ways also. If next year, interest rates further go down, naging 3%, then you also stand a chance to benefit from the lower interest rates. What I personally tell clients in my coaching service, if they ask about mortgage and housing loans, I typically suggest a 3 or 5 year lock-in period because that's about the right balance of getting still a comparable rate to the best rate, pero at least may protection ka for the next 3 years na alam mo kung magkano yung amortization mo. Again, totally a personal choice, but you just have to factor in the volatility of the decision that you made. Now, say for example, you went with the advice of 5-year lock-in period. So, say 5 years na bayad ka. At the end of 5 years, your bank will actually tell you, okay, time for repricing. Ito yung bagong interest rate. What I had in my own personal experience was the interest rate went up by 3%. And that was a very, very big increase. And if I look at other banks, they were actually offering rates of about 2% less. So it made me think of a way to actually do refinancing as a strategy because if your current bank is charging you 2% more than the current market or other banks, then why pay that extra 2%? It may seem small kasi 2% lang siya pakinggan, but if that 2% is applied to 2 million, 3 million na loan, that amount can easily be several hundreds of thousands in interest fees alone. So what I personally did as a strategy was talk to another bank and try to get my bank refinanced. Refinance is just a sexy way of calling ililipat mo yung utang mo from one bank to another institution. So, Bank A, for example, is your current bank. Bank B can actually approve a loan for you and technically take out that loan from Bank A. Parang babayaran ni Bank B si Bank A, tapos na kayo ni Bank A, and now yung utang mo na kay Bank B na. That's basically how refinancing works. Now, pag nilipat mo na kay Bank B, you now have an option to now talk about the 4 things all over again. So, recap, meron kang loan tenor or the term. So, depende kung ilang years mo gusto ulit mag-utang. The loan amount, which ideally is now a reduced amount kasi nagbayad ka na over the last 5 years in our example. The interest rate, and then also the repricing period. So, itong 4 na to, pag-uusapan niyo ulit. Now, what you can do when you do refinancing, one of the ways that you can manage this is what I did, refinance to a lower interest rate but keep the same term. So, for example, since my 15-year loan ako, I paid 5 years already. Ang ginawa ko, when I refinance, I only still had the loan for 10 years, pero at a lower interest rate. So, mas mura yung binabayaran ko na monthly amortization. Some people also do, ililipat nila to Bank B at a lower interest rate, but they would also extend the loan again. Meaning, instead na 10 years na lang sila magbabayad, ini-extend nila to 15 years ulit. What this does is binababa nito yung monthly amortization mo further kasi yung now reduced principal amount, sinispread mo further into another 15 years. While this may be counterintuitive, some people actually do this because they have planned repairs or planned mga major improvements on the house and they actually need the money to finance for it. So, sinasama nila doon sa financing ngayon. What's good about this kind of strategy is typically housing loans are still cheaper than personal loans. So, instead na mangutang ka sa credit card or mangutang ka sa personal loan in the bank, the personal loans would typically range at about 8 to 12% per year if you're lucky. And if you do credit cards, and even worse, mga 20+%. So, if you actually fold this into your refinancing, you're probably going to enjoy better rates because housing loans typically hover in the 5 to 7% range per year. So some people actually do that. Now, when you do that, it's a great way for you to actually manage your cash flow, plan for major expenses, but overall in general, like what I did, I can save on interest payments because I was able to transfer my loan from one bank to another. There are a few caveats before I end this video that you have to take into account when you transfer loans from one bank to another. Number one is to take into account the fees. So there can be fees on both sides of the equation. Fees can be pre-termination fees or administrative charges that your bank will charge. If there are prepayment fees, ask your current bank kung magkano to. You can obviously ask for a computation. It's your right. Ask your bank or an officer in the bank to give you a computation of a what if you want to refinance this with another bank. In a lot of cases, when you bring up the term refinance, they will have some counter offer to you. So go ahead and listen to that as well. Because if they can actually counter offer a good enough interest rate, then you probably will save yourself the hassle of refinancing in the first place. The second set of fees also come from the fees on the second bank, si Bank B. Because si Bank B, technically, maggagawa siya ng bagong loan, then the same bank charges that you've undergone in the first loan are now in play again. So, magbabayad ka na namang processing fee, doc stamps, etc., etc. So, those fees can also add up. So, just make sure that you factor that into the decision that you make. And I say this because then, if may mga 0.2, 0.3 difference lang in the rates of those banks, sometimes and in most often of the cases, it doesn't make sense to actually do a refinance option. So take this as a mathematical exercise, and if you have someone in your circle who wants to do these exercises, you can probably ask their help. Or if you actually need help from a finance coach or a financial advisor, then you can also tap into those resources if you are having a hard time making the right decision for yourself. I will link my own personal coaching service in the description box below just in case you want to reach out to me. My social media sites are all in the description box. One of the best tips that I can also leave with you in this video is to check on seasonal promotion from banks. Typically, banks are out to get each other's existing businesses. While typically hinahanap nila new customers, banks would have seasonal promotions to actually take business from another bank. So refinancing in this case is one of them. So in some cases, what they will do is, for example, they will have a promotion na better rate if refinancing. That can be one. Second is they can probably waive fees for you if you refinance your existing housing loan with them. So then, natatanggal na yung fees in the equation. Or third, they can actually even give you some payment holidays just to entice you to move into their bank. So all of these can be good ways to offset cost, and obviously who doesn't want free money, right? Or more promotions on your housing loan. So in a lot of cases, these promotions are a bit seasonal. They typically happen around half two of the year. My hypothesis is that maybe banks are chasing quotas and sales targets. That's probably one of them. So it may be good to check with your bank or check their website if they have a promotion ongoing. Again, promotions have their own terms and conditions, so just make sure that you understand what those are and factor those into your decision making process para ma-maximize mo talaga yung decision mo to refinance. Overall, these three ways of paying more frequently, and refinancing are effective ways to manage your housing loan. And when you have that housing loan already set up and you have that as your biggest purchase, it can be worthwhile to check what those terms are and make sure to be very aware every repricing period, because sometimes some banks just charge you way too much when they reprice the interest rates. So this can be a good way for you to actually reassess that loan, and if you have extra money, then you can actually pay that off or employ any of these three strategies so that you can at least maximize the amount that you're paying so that you don't drown in interest or potentially miss out on any of the value that you can probably get if you do any of these three. I hope this video was helpful, and this is actually one of the 8 pro steps towards financial freedom, because housing loans are a very big component of your financial journey and your financial obligations. So if you want to learn more about the other steps, or if you haven't seen the video on the 8 pro steps, I'll link to those in the boxes right here. You can check them out now, because all of this linked together for you to create your own path towards financial independence. If you want to learn more about investments, you can also watch this video so that you can learn how to make your money work for you and try to assess whether your investments are currently in play and making the most value out of every peso that you have. If this video was of value, please hit like and subscribe for similar videos, and hit the notification bell as well. Thanks, and I'll see you on these 2 videos.